I was in one of my Discords today, and somebody was posting a chart that had a channel on it, and it got me thinking that channels are an interesting thing about technical analysis, because while they often work, it's not necessarily the bigger picture, because often what those channels are is really much larger time frame deep structure that you're seeing, and it's important to know where they come from. And this is why I hammer on the importance of drawing proper trend lines, because you can draw these lines and find this deep structure yourself and make trading decisions off of it. For example, this line right here, this kind of light gray dashed line that goes across here, you can see it and this is a 4-hour chart, right? And so this is probably a couple months ago, December, mid-December. Price hits this level, this gray level, and then it hits it again on February 6th, and then dumps from there. And this level is one that, like, I wouldn't necessarily play it directly, but you can see it getting this respect. So I mean, it looks fairly horizontal, so you'd have to ask yourself the question, where does that level actually come from? So in order to kind of show you, I'm going to start with max size. And actually, we're not even going to do a week. Let's do a max size of a month, so that we can see the entire S&P 500 chart since 1985, which is as far back as TOS goes. So what we're loading now is a monthly chart. So you're seeing month by month. Each one of these bars is a month. And you can see this dashed gray line starts in like 1983. I mean, this is a trend line that I've had on this chart that started in 1983. And so if you hit activate on here, you can see that I'm drawing it off of this level right here. So when it dropped to that level, what I was trying to see was the upper end of where that would be. And then zooming in on this, you can kind of see, let's just get a bigger picture view, that this ended up getting this respect on the monthly chart further out. So at this point, let's switch to a 3-year 1 day, so you can see a little bit more of the finer details. So this is deep structure. I mean, this is 1983 to present structure that is being formed by these really long trend lines. So you can see this is where it was drawn from, was this drop, and you can see it is sort of getting this respect all the way into today. And this is a daily chart. So this is the peak that we had back in January, and drawing the lines from the highest peak to the next highest peak, from that highest peak to the next highest peak, and then when they break, I keep them. So I just make them dashed lines once they break, so that I can kind of have an idea of what these levels are doing on a smaller level. But they're also retracements. You can see that this line, if you go into activate, you can see this line was formed here, and then gets respect here, and then it breaks through here finally, but it's still getting respect here, just like a horizontal trend line. We break through, we reconfirm, and we go back up again. So I'm not saying that price is going to bounce from here, but the fact that it held this trend line from beginning of the year, is a pretty good indication of what this overall price is doing. Price is fractal. It works the same way on every chart. From a 1-month chart to a 1-minute chart, price works the same way. So these trend lines, if drawn properly, will give you this deep structure from a very high level to a very small level of what the price is actually doing, and how you can use that to get some insight into what it may do in the future. Because like you've seen it get formed here, get respected here. So when price starts approaching this line again, you're thinking, well, I may want to short this. And if it breaks, it may go. But here it did break, and let's activate this to show this is where this line was drawn. And even in here, you can see it still getting that respect. So this is not a channel. This is actually it's a trend line, a historical trend line that was drawn in. So you zoom in on this, and you can see, like, this is the same principle. We're still on the daily chart, and you can see these lines. It tries to break through, fails. Tries to break through, fails. Tries to break through, succeeds. We draw a new trend line. This solid trend line means it's the next one up. And then actually, let's zoom into a 90-day 4-hour chart so that you can see the finer detail. So this is what I mean by fractal. This is like a Mandelbrot set where you zoom in on these things and there's just more detail. It never ends. There's always more detail to be had, because these charts are fractal, and the price trend lines work the same way in every single instance, in every single one of these charts. It's all working exactly the same way. And it should inform your trading decisions. You know, I mean, when you see these lines being formed, you really have to ask yourself, you know, on a bigger picture, where can I use this to get in? So this is the same chart we were just looking at on the daily, only now it's a 4-hour chart. And you can see here that it's beginning to try to approach this line and then fail. And then at one point there was actually a smaller trend line here that would have been formed that also still gets respect. I mean, like, you can see that this trend line is, like, days later, weeks later, still getting respect. I mean, these things don't go away just because they're broken. Like a price level. A price level doesn't go away just because it's broken. A price level is just a horizontal instance of a trend line. It's just a special case of a trend line. They work all the same way. Horizontal price levels are trend lines. They're just like, you can think of them as a trend line that has its initial point in the infinite past instead of 1983. That's how horizontal they are. So you can see here that like, so on this daily chart, and this is also like from the very beginning of the year, you can see this line coming down. Price comes up to it, doesn't quite make it. Like, it broke through the one time, doesn't quite make it. This is the same line we've been looking at from the very beginning, from that much bigger chart. And now we're looking at the deeper structure of this thing on a 4-hour chart, and you can see that these white lines are still getting respect. And so when this finally breaks through, as of today, it breaks through this the same way it broke through here. So I'm expecting at this point, if this were a trend line, I'd be thinking to myself, well, this is a great break. I want to see a retest of this on the higher level, and then, you know, have it keep going, because it tested it, broke. It's a really common pattern where on the third time, you know, it's the triple top break. But this is a trend line, so that's how this stuff works. So the next one, let's go down to like a 30-day, 30-minute. Or actually, let's go to a 10-minute. We can just see this on the 10-day, 10-minute chart. So now we're talking about an actual tradable, like, day trade chart. This is one that you know, millions of traders use, is a 10-minute chart, 10-day, 10-minute chart. And these are, again, this is the same drawing set that you saw from the monthly, and we're just zooming in, like, fractally, and you can see exactly where these things, I mean, it draws the lines slightly differently on the charts, but you can see how on the 10-minute, this is getting just a ton of respect. Like, this peak and this peak right here are almost exact on there, you know, and it's not an accident. These levels are not an accident. This is, again, deep structure of the market in a very fractal way. You can see this come to life. So what we're seeing here, now that we zoom in on a 10-minute chart, this is today, right now, this is what's happening. It came back down, it retested here right around 4,000. Not a coincidence, right? This is a very huge psych level. More confluence, this line, and the 4,000. I mean, I have tons of indicators that show that this is a pretty powerful level anyway. All of this confluence is adding up to this very deep price structure that is respecting these lines. So as of here, taking you know, this trade down as close to this line as you can get for a long is actually, since it broke through, this is the retest of a line that goes back to, you know, this is that January line, right? I mean, this goes back to January 4th was when this was first drawn. It intersected on December 13th. So that's the 2 points on the line. And yet here we are, like, zoom in, and you still get respect on this line, this ancient line. It's a month old, you know, and at some point we're going to start hitting those the daily lines and the weekly lines that I drew from way from 1983, and we will still see interaction with them because price is fractal on every level, and that's the thing that is so powerful about realizing that higher time frames should inform your lower time frame decisions. Like, I may not be planning to get in the market here for, you know, the next 3 months. I want to day trade some futures. So what I'm looking at is this pretty massive break, And now, as it goes up, if it retests this line, which is this is the most current daily line. So this is one that I drew. What is that? That's today. This point right here will define how this price action moves. If it rejects off of this, well, maybe it's not ready to it may come down and crash back through here. But if it breaks through this, then that's just, again, more like fractal level price action awareness that tells you that this price may keep going. So this is why, I'm fairly bullish on the day, because I look at this chart and I see this as a retest. And it may not make it there today. It may not make it there tomorrow. There might be some consolidation, whatever. But either way, even if it crashes down, these levels are getting respect. And that's the important thing. And this is why it's important to draw trend lines properly, from peak, the highest peak to the next highest peak. And then from that next highest peak to the next highest peak, down, all the way down. And same thing with the valleys here, where you draw it from the lowest to the next lowest, and then from that one to the next lowest. And it creates this fractal boundary around the price. That's the maximum level the price has gotten to this point. And then within that, when it starts breaking those inner trend lines, you start paying attention to those. You start drawing more trend lines, and you start realizing that this is where the price action matters. This is where, like, it starts respecting and then rejecting. And it's not necessarily, going to tell you anything other than what the price action is currently doing. But if it breaks through these levels and then comes back and retests them, then it's a good indication that it's going to keep going. You can just keep drawing these like over and over and over again, and you'll see that this is a very consistent thing. This is how price action works, and this is how it's defined. And this is why it's important to go look at your higher time frames all the way back to 1983.